Good morning, ladies and gentlemen. Welcome to the Bedtime Trader. The Bedtime Trader is a methodology that I have been using for quite some time, and I'm sure you will enjoy this because this is something you do at bedtime. Today I'm going to introduce you to the exciting world of Forex trading. I'm going to assume you know nothing. Now I know some of you do, but I'm still going to assume you know nothing, and we're going to go through the seminar exactly like we've always done. My wife Janet is here to assist me. She will hand out the manuals to you. These have been rewritten fairly recently, so they are fairly up to date. Things do change, and you'll see today from those who have been before that there are quite a few exciting changes to come later today. So Janet will pass those out now, and we'll get underway. Okay, right. Simply trading Forex, trading the Forex market, what it is and how it operates. The foreign exchange market, called the Forex market, is the largest financial market in the world. If you put all the stock markets together and so forth, it still would be dwarfed by the Forex market. I've put on there $3 trillion a day, but in fact there is probably nearer 4 to 5 now because the market is growing considerably. It operates 24 hours a day, and that starts on a Sunday evening because the Far East think it's Monday, at around about 9 o'clock, depending on which platform you're on, and it goes on non-stop until 2200 hours on a Friday evening, which is the American close. The London market is from 7 till 5 o'clock. That really doesn't mean that the Forex market closes. All that means is that during the period 7 AM till 5 o'clock, that's when the London traders are at their desks. And you will see a significant difference in what is happening on the Forex market because we are still considered to be the financial centre of the world. How long that will last is anybody's guess. But you will see a marked difference in what is happening. The overnights now are in the Asian markets do move quite considerably as well, but certainly between 7 o'clock in the morning and 5 o'clock at night is when we will see most of the movement. $1 trillion, just to give you some idea of what $1 trillion looks like, that is a $10,000 bundle there. What do you think that is? Anybody who hasn't been on the course before would like to give me some idea of what they think that might be, that package at the bottom there? If you had $1 million, you could actually carry that around and nobody'd know you've got it, would they? What do you think that is then? That in fact is a 100 million. That is obviously 10 times 100 million, which is, anybody ever guess it? No? Anybody know what that is? No? Well, that is, sorry? $1 billion, well done. Yeah, okay. So that's $1 billion. So you'd have to move most of your furniture out your dining room to get that in. That there is $1 trillion. And you can see there's a little gentleman at the end there, standing by. It's 2 pallets high, roughly to the size of a football pitch. The reason I show that to people is, firstly, I found it on the internet, or Janet found it on the internet. But the interesting thing is that I get I get a number of emails from people suggesting that somebody's sitting on their shoulder when they're trading and that you know, every move is being watched. Well, when there's 3 of those kicking around every day, I think the likelihood of all of us combined aren't going to make too much difference to the market. So that's $1 trillion. So as I say, there's 3 of those kicking around. Okay, the Forex market is organised in currency pairings. The 12 major currency pairings that I monitor for you are the pound dollar, the euro dollar, the pound Japanese yen, the pound Swiss franc, the euro pound, the euro Swiss franc, the euro Japanese yen, the dollar Japanese yen, the dollar Swiss franc, the dollar Canadian, the Australian dollar, US dollar, and the New Zealand dollar, US dollar. So those are the currency pairings considered to be the majors, which I will be reporting on to you on a weekly basis. It's the movement between these currency pairings that we're interested in. If I say in my updates that the pound is, or sorry, the market is moving to the upside, it means that the first one of those pairings is the one that is moving upwards, which correspondingly means that the second one, the dollar, is moving downwards. all right, because obviously if one going up, the other one has to be coming down. So those are the pairings, and that is the movement between them that we're going to be looking at. Currency monitoring, we obviously can do that now because we've got the internet. When I first started trading, you couldn't do that or do it so easily. You had to do it through a broker. Now anybody can actually trade on the markets through the internet. You're going to have the same information as the professional city traders. All you need is the knowledge to do what they do and follow them. We're going to be using live real-time charts, which I'll show you a little later. And that's how we're going to be able to trade the Forex market. So what makes it move? Well, it's one currency being traded for another, as we've also already suggested. And the people that do that are professional traders, large banks, multinational corporations, currency speculators, governments, yourself when you go down to your friendly travel agent to get your dollars or euros if you're going abroad. And lots and lots of people affect the currency markets, some of them in a very small way. I do have a friend who builds Formula 1 racing cars, and he does it for a billionaire based in Brussels. And that guy has become a currency speculator purely because he buys £1 million worth of euros to finance his joy of racing Formula 1 cars. And because my friend is building them in the UK, he's having to buy parts in Europe, he's buying parts in America and so on. And so they become currency speculators purely because of their sport, really. So that's how the markets are affected by what people are doing out there in the markets. Just to give you a quick background, the bulls and the bears, most of you have probably heard of that, but the bulls probably stemming from the fact that bulls tend to toss you in the air and bears tend to sit on you before they eat you. So a bullish market is one that goes up. You're buying into the market and you are said to be going long the market. That is the terminology that is used. A bearish market is the opposite, where the market is going down, you're selling the market or you're going short on a trade. These are the two most confusing ones, probably because they tend to suggest it's time sensitive, but it's not. You can be in a long trade or a short trade for weeks. All right, so it's got nothing to do with time. It's just purely the direction. Okay, if you've got an open trade, it means that you've actually got a trade on the market. And if you're square or flat the market, it means that you are either square or flat a particular pairing, which means you haven't got a trade on that pairing, or you're square and flat the market in total. You haven't got a trade on at the moment in the marketplace. Okay. The reason I tell you that is that sometimes I will refer to that in my updates, particularly if a Friday is the last Friday of the month, when big institutional traders have targets just like anybody else, and you will see that there can be quite a significant difference the last Friday of the month if some of the big traders are squaring their positions, i.e. they're coming out of positions ready for the new month and so on. Okay, so it does make a difference. Trading discipline. Well, there's lots and lots of things written about trading discipline, but generally speaking, what we're talking about is how to avoid getting it wrong and the emotions that will stop you doing that if you're not careful. Fear and greed are possibly the most important emotions that we should try to overcome. Fear, because if you've never placed a trade, it's that pressing the button the first time that causes you fear. And when you're in a trade, greed can sometimes take over when you know you should be coming out of a trade, but you carry on. And also you obviously start to increase your stake as well, but we'll talk about that when we come on to trading. So fear and greed are emotions that need to be overcome. I'm going to give you a clear methodology today which will enable you to overcome these emotions, because it will to some extent become almost mechanical, and therefore you will be able to overcome fear and greed. You won't straight away, but in time. Having a money management system also will help. A money management system, and ignore it at your peril. But what a money management system does, it ensures you stay in trading, and it ensures that you have a controlled risk when you are trading, and you should always stick to that. So as I say, ignore it at your peril, but we'll be talking about that later today as well. So having a trading plan, using the technical tools to determine the future direction, is what we're all about. Now mindset, it's okay having all the tools available, but if your mindset is wrong, then this can be one of the biggest factors that makes you less successful than you would like. For instance, an uncluttered mind makes for good decisions. If you wake up and you don't feel particularly well, or you've got a headache, or something else is bothering you, trading has been around for thousands of years. Not the way we do it now, obviously. But it will be around. When there's $3 trillion kicking around every day in the market, it is not going to disappear. So if you don't trade today, don't worry. Like buses, there'll be a few more coming around Monday, Tuesday, Wednesday next week. Okay? So an uncluttered mind makes for good decisions. You do not generally trade yourself into a better frame of mind. You generally it will affect your trading. So just leave it alone, get yourself sorted out, and then go back to trading. Desperate money is lost money. If you are desperate to make money, the chances are you won't. The problem is that your mindset's not right. You have to accept the fact that you are trading, and in trading you will have some that do not go your way. I'm not going to call them that horrible word losses, because they're not losses. What I'm going to call them are loans to the market to be recouped at a future date with considerable interest. So remember that. It's not a lost trade, it's a loan to the market. Okay, so predicting the exact top or bottom of the market is impossible. I'm going to give you some tools today that will help you to at least know where the likelihood is of the top or bottom of the market. I put on there, always consider the reasons not to trade. That is important because you should be doing that, and time is important when it comes to consider the reasons not to trade. You shouldn't consider the reasons not to trade after you've just pressed the button to trade. You should do it before. So make sure you do that. What will tend to happen if you're not careful is you'll turn the screen on, you'll see the market moving, and whoa, you want to get in very, very quickly, and that is not the way to do it because you haven't done your analysis. Then after it goes wrong, you do your analysis and you find that you should never have been in there in the first place. Happens to us all, so don't think you're unique, but always consider the reasons not to trade before. Winners, I put on losers on there. Analyse both. If you do have a loan to the market, make sure you look at that very closely, but also make sure you look at the winners, because most people don't do that. They think, that's a nice win, thank you very much, and they move on to the next one. Just make sure it wasn't a fluke and that it did actually conform to the methodologies and that it was a trade that you should have been in. All right? So that's why we say analyse both. I am using a number of software packages at the moment. There is a lot of activity to get your in an attempt to get your business from spread betting companies at the moment. We are looking at a couple. I'm going to give you some later on, two possible alternatives. But as far as MetaTrader is concerned, MetaTrader now is available to spread bet directly from the platform. That only happened 6 months ago. Right, so you can directly spread bet from a MetaTrader platform, MetaTrader 4, not 5, MetaTrader 4. You can trade from 5, but we are using currently MetaTrader 4. And we are using them from a number of companies. They are available from one of the following companies. That is a company called GKFX, which we are using at the moment. RPDFX, which I'm going to introduce you to a little bit later on, which is another company that we've just started to look at, and Alpari, which is one that a lot of you have been using as far as MetaTrader is concerned. Bearing in mind it is MetaTrader, so the differences are very subtle between these platforms, and once you know how to use one, you should be able to use any of them. The good thing about having alternatives is because they are spread betting companies, the spreads will differ. And a spread on a large trade can make a significant difference, as we probably all know. But those who don't know, I will tell you about it later. But a spread betting company that is offering better rates than someone else should be considered. Now, once you start to trade and become proficient at trading and doing it regularly, you should have more than one account anyway. Because the spreads change, you can actually quickly flick from one to another, and it is very easy, as you'll see later on. So those are the companies that I'll be talking to you a little bit more about later on. Okay, the anatomy of a price bar. Now on any of these platforms, that is a MetaTrader platform. This one is from GKFX, as it says so at the top there. All right, spread betting account. Those of you that have tried to load a spread betting account from GKFX, just make sure that the spread trading account that you've got does actually say GBP or the pairing. It gives you the pairing first of all, which is the Great British Pound versus the US dollar, and it says SB afterwards, spread betting, because it is possible to open other types of accounts like CFDs and all sorts of other things. So make sure you have got a spread betting account, and if you've got a live spread betting account, you will have that SB at the top, and then it says daily. That only says daily because it's on the daily time frame, but I'll talk to you about that in a moment. Right, going back to the price bars, these are price bars, and what actually happens with a price bar is that, and these are daily price bars. I used the thicker one, I think. I'm not sure whether this is thicker. Yes, it is. As you can see, that is a price bar. You have an open, which is the little line on the left-hand side. You have a high, which is the highest point it's reached during the course of the day. You also have a low, which is the lowest point it's recorded during the day. And then before the close, or sorry, at the close, which is the most important of the day, that particular price bet has closed with a little horizontal line on the right-hand side. So you can see on that day, it opened there, went up and down, and it could have gone up and down a dozen times or more. But the important thing is, at the end of the day, it closed there. So on that day, the market actually rose. Conversely, if the open is there and the close is there, the low is there and the high is there, during the course of that day, the open and closes below the open, and therefore on that particular day, that price bar is telling you that the market has moved down, which is all very well when you have on the screen days like this where you can obviously see the markets going up. But when you have some what we call consolidation, it's very difficult from price bars to determine which days are going up and which days are going down, as I'm sure you can see. Therefore, what we do, we prefer to use candlesticks. And what candlesticks are doing is basically filling in between the open and close and giving it a body. And because that one is going up, we colour them green. And because this one has gone down, we colour it red. It then becomes very simple to see that there becomes that. There's obviously a few more subtle changes because you'll have seen we've gone from a black screen to a white screen, but it tells you in the manual exactly how to do that. But nevertheless, here you can obviously see which one's now going up, and even in a period of consolidation, you can see which ones have come down and which ones have gone up on a daily time frame. So that is why we use candlesticks. Candlesticks are renowned for having what most people would call wicks. Not B and Q, wicks. Yeah. Wicks are what protrudes from the top. Most candles don't have wicks sticking out the bottom, but we do have a protrusion there. What these are, the official terminology is shadows, and the length of the shadow can be important to us. Okay, so those are candlesticks, and those are what we will be using on our charts, and that is why I am showing you that at the moment. Okay, the charts are structured, or how the charts are structured, and setting up the charts. I don't intend spending too much time on this, purely because it's all in the manuals, and it does tell you very, very succinctly how to change the black screen, which is that one there, to that there. And it is very simple. Once you've done it, you then say you do the first one first of all, which is the pound US dollar. And once you've done that one, you save it to a template, and the template then is used to load all the other pairings. And they all come on the screen just like that. Okay, so how the charts are structured. I'll use this particular tab to illustrate how the charts are structured. We have a number of things on there. Anybody here that's never used MetaTrader? No? Everybody used MetaTrader, so you should know a lot of this anyway. Okay, but nevertheless, I'm going to just cover the most important things. At the bottom of the screen, you will have the tabs for the different pairings. The tabs at the bottom will enable you to move from one to the other. Anybody who suddenly says, well, those aren't in the same order, it's because I've put certain examples on here. So don't expect those to be in the same order. But I'd like you to set them up, and then you can quickly flick from one to the other as you go through my update. Yeah? Right. So that is the bottom horizontal axis. Above that is the date. And the date there is obviously for the candles. They can't get everyone in, which is why there are gaps between them. However, if you use the crosshair, which is the cross at the top there, if you use that crosshair and click on it and bring it down onto the screen, you can actually put the vertical line on any candle that you so wish, and it will tell you, it'll highlight at the bottom there what the date is for that particular candle. Also, the horizontal will enable you to see that that particular candle there actually touched at the bottom that price there, because this is the price down the right hand side, the vertical axis on the chart, and that would actually tell you the price of the pairing that we're on, and this one is the pound US dollar. And you will also see that there is a grey line. If I move the cursor just away a moment, you'll also see that there is a grey line there, and that grey line is the current price at this moment in time. This is live. There is a gate at the bottom of the chart there, and if that goes to red, it will say no connection. That is either MetaTrader or whoever you are using MetaTrader from turning you off for whatever reason, or it means that your broadband system is not working for a moment. So just make sure which one it is and get it to that situation there where it's a bit of a bluey grey type gate. That means it is live, but you'll soon find out whether it's live, because if that doesn't move while you're looking at it, then you know you're not on a live account. All right, so it is important when looking for trades that you make sure that what you're looking at is absolutely up to date. Don't start trading on yesterday's information. Okay, right, so the right hand side is the price, and the price at the moment on here is 1.6064. Let me just move that. 60649. Now, spread betting companies some time ago, a couple of years ago now, actually started moving to 5 decimal places. What that actually means is that 1.60, did I say it was? 6064, and then they put another decimal place on the end now. What that actually means is, though, that 9 is 9/10 of 1 pip. Now 1 pip is the difference between 16063 and 1604. That's 1 pip or point. You can call it whichever you would like. But the difference between 63 and 64 is 1 pip or 1 point. Important that you know that. All right. The reason it's important you know that is because if you are trading at £1 a pip and the market, you are expecting it to go up and it goes down, it means you've loaned £1 to the market. If in fact it goes from 6064 to 1.6065, it means that you have actually just gained £1 from the market. All right? So that is the reasoning behind these prices here. They're not all in 4 decimal places. When you come onto the Japanese yen, it'll be 160.09, but they'll put another third place on. Later on, I'm going to show you something which will solve all your problems as far as that's concerned, so don't worry about that at the moment, all right? We will give you something later on which instantly tells you what you're risking and what the price is, okay? But you can understand that that is the pricing there. Obviously, the difference between 1.6, if you went to your friendly travel agent, 1.6 to 1.5, if they offered you that when you went to, say you're going to the States, you probably wouldn't be too fussed about the difference, because by the time you got to America, the difference between those two probably buy you an ice cream. But in terms of trading, that in fact is, the difference between those two is in fact 1,000 points. And if you're trading, because it goes to 4 decimal places, and if you're trading at £1 a pip, that obviously makes a difference. The first one is support and resistance lines. Now, I know most of you say, oh, support and resistance lines. I'm always doing support and resistance lines. When I get an email from people to say they've loaned something to the market because the trade hasn't quite gone the right way, rest assured, it's generally speaking because they've ignored the support and resistance lines. They didn't see the support and resistance lines or whatever. And some of them are pretty blatant. So I'm going to tell you the ones which, as far as we're concerned, are important. Incidentally, I didn't show you that tab earlier. Somebody said to me not long ago that they didn't like a white screen. MetaTrader, you can have any colour you like. Right? You don't have to have a white screen. You can have a dark screen. You can have a black screen. You can have 1,000 colours in between. The point is that those aren't red and green, but some people can't see red and green. So I don't care what colours you have, as long as you know which ones are going up and which ones are coming down. That's the point. All right? And MetaTrader enables you to do whatever you like as far as that is concerned. Okay, support and resistance lines. Now, support and resistance lines, if we deal with resistance first of all, the resistance point here is there because when the market stopped from going down to there and then started climbing, it got to a point there where resistance, for whatever reason, was encountered. And that is the point at which the market does not want to go on that day or the days following, for whatever reason. So therefore, there is a resistance point there. You can see it reached that point there also that day, and it went up there again the following day. So there is obviously a resistance at that point. The market then fell from there and came all the way back down towards support. That support is the point at which the market, for whatever reason, on that day doesn't want to go any lower. That is the essence of support and resistance. Support is supporting the market. It doesn't want to go beyond lower. Resistance is the market has got to a point where it doesn't seem to want to go higher. That's the essence of support and resistance. Now, to have a support and resistance line, you've obviously got to have at least 2 touches because you can't draw a line otherwise. So when the market went down here and started coming back up again, it stopped there and stopped there again before it fell away. You then have the ability to be able to draw a resistance line where it is likely, should the market come back up again, that it may well touch again. Now, I didn't draw, I haven't created this. This is from the Euro US dollar in March 2012. You can look on your chart. That exists. And I found it. Now, bear in mind, the Euro US dollar is the most traded currency in the foreign exchange. So of that